Hello, everyone. Welcome to another life changing edition of Faces of Resilience. This is your host, Furley Almonte. It is not often that you actually meet a person who would actually make self sacrifices to be able to protect her employees, her friends, the people that she deeply cares about. And when you meet people like that, you are just feeling so blessed because they come very rare like diamonds. Now, not only are these people really kind-hearted, oh, I feel also very blessed to have known this person who also helps people who struggle with businesses and help them move through the pandemic, through the different challenges that we're going through with her business strategies. And not only that, until I met this person, I've never heard of such a thing called mortgage wellness checkup. Well, now I'm telling you, this is going to be a life changing episode for you. So, anyway, let me just give you a little brag points about my super special friend and guest. Lawanna Bradford is a global strategic leader. She's an international best selling author of 4 books. She's a speaker and mortgage expert. Is also a change agent of over 30 years of strategic expertise to increase growth and market positioning of federal and private entities. She is the COO of the Bradford Group, a commercial and investment mortgage brokerage, and Bradford Group Consulting, a business management firm. My goodness. This lady also, did I mention she's a 4 times international best-selling author? Besides that, she also regularly appears on the Mortgage Voice national radio show, and Cyrus Webb presents Blog Talk. Ladies and gentlemen, it is my pleasure to present to you Lawanna Bradford. Woohoo!
Thank you so much, Furley, for that wonderful introduction. It's so great to be here with you today.
Oh my gosh, my pleasure. I've been looking forward to this day because ever since you shared your story with me, I kept saying, wow, I you're only the second person I heard about that would actually make personal sacrifices for the sake of your employees. Can you please share us the story about how this all came about?
Sure. Well, everyone has heard of the 2007 2008 mortgage crises, and I was, I don't even want to call it a victim. I was hit by it because being in the mortgage industry, we were the first one hit. That was my way of feeding myself, feeding my family. And we had at the time 18 employees, Furley. And my heart was just bleeding. I thought, oh my goodness, I cannot go to these individuals to tell them I have to let them go.
Hmm.
So what I did at that time, I had 1.3 million in my personal retirement fund. And I said, well, I can take this to help to secure them for as long as possible. And that's what I did. And unfortunately, 1.3 million does not go very far when you have 18 employees, you have employee tax, you have benefits, and all the other factors. But for me, the impact was that 1.3 dwindled down quickly to $7,800.
Wow. Your retirement money? Oh my
Was
goodness. Did
was
it scare
gone.
you?
But when you and I we when we spoke earlier, I don't regret what I did, but I would have done it a little bit differently. I would have had, instead of allowing just slowly my emotions to take charge, I would have been a little bit more logical and said, okay, we can use part of this, but let's create severance packages for these 18 employees and give them a strategy to create sustainability for themselves,
Mm.
and work in partnership with the local unemployment offices, et cetera, to see where they might be placed rather than just milking everything that I had to, to help them to stay afloat. Does that make
Yeah.
sense?
Isn't it interesting because like fast forward, like 10, 15 years later, we say to ourselves, "Oh, I would have done it differently." I've said that to myself so many times. But then again, during that time, that is the only thing that you knew, right? By the
Yes.
way, during that time there was no PPE, right?
no PPE, no government protection programs for homeowners. If you held credit cards, credit card companies were demanding payments in full if there were outstanding balances. There
Wow.
was just nothing really to help protect and insulate the consumer or employees like what we've experienced during the pandemic. So
Wow.
I'm
No
so glad that
stimulus.
with the pandemic, the government did come in and say, what can we do to help, the American people?
So you were actually the government for your when you think about it, you were the one who stepped in and saved the day because really, you know, I feel for you and I admire you. You are one remarkable human being for having, you know, put put your retirement money of 1.3 million dollars at stake and actually practically gave them away, right?
Yes.
um and actually you did share something that one of your employees never forgot all about it. And it was a very heart wrenching story and touching at the same time. What can you share that, please?
Yes, I met up with my former employee a couple years ago, and they are now doing very very well. Have a beautiful home, and she thanked me for what I did. She said that she knew where the money was coming from. The other employees didn't know, but because she was also a personal friend, she said she knew and she realized just the sacrifice and that it helped her and her family to hold on to their home and not lose their home during that time. So
My
when you
goodness.
hear stories like that, it's a really good feeling. But again, I would have done it a little bit more. I would have been more strategic about it,
Yeah.
so that it would have been a win-win for both them and for my future self.
Yes, definitely. But this is a show about resilience. How were you able to bounce back from that massive financial disaster?
Yeah, it was a disaster. My father said, he goes, Lawanna, you are in the abyss. Are you ever going to get out? But what I did is I looked at my business and I wanted us to still survive. I didn't want to close our doors like other companies were having to do. And I realized that we would have to shift, still stay in the industry, but instead of being on the residential side, go to the commercial side because that wasn't hit as hard. But the other piece of this that was really devastating, not only did the pandemic hit, I ended up getting a divorce, same time period, and my
Oh my
business
God.
partner, who was the broker of the company, my brother, left. And he did so to protect his family. He had to do what he felt was best for him. So I'm stuck having to figure out how to keep afloat. Quickly, as I said, pivoted to a new lane of business in the mortgage industry and got all my certifications and licensing that I needed to legally keep the doors open. And it wasn't an overnight fix. We use the term bounce back, but people often don't see the long struggle, painful struggle. It was 3 years of darkness early.
3 years
Three
of
years,
bouncing back, 3
3 years of
years of holding on to your faith and figuring out
yes,
a way out of it. Actually, let's stop there for a moment because oftentimes we see people who are very successful, like who you are right now, right? But never realizing that you've been through very dark moments of your life, right? Having basically lost your retirement income, your marriage falling apart, your own family bailing out on you, things like that, like one after another. But you know your faith was very very strong, obviously, and so you were able to continue to do what you had to do to stay afloat. But how did the reversal, of so to speak, of your situation come about?
it came about well twofold. So the one thing that I always tell my clients, my consulting clients, is look for those who've been where you are
Hmm.
and learn from them and don't be ashamed or embarrassed to ask for help. So for the commercial side, I had never been in the commercial side before. So I went to commercial experts to be very honest. This is where I am. I want to keep my business afloat. I need your help. Can you mentor me, give me tips, tools so I can accelerate, quickly in this lane? But then
Wow.
on the financial side, I went to I have another business partner. We've been partners for over 30 years, and I asked him, because I knew he had gone through some financial hardships. I said, "What did you do? I've never been in this world before. I don't know what it's like to be in a place of lack, but I'm learning very quickly." And so he guided me through what to do, letters to write. I was sued by by two credit card companies. Well, at the time, I couldn't afford a lawyer, so I represented myself in court and won, but only because I had the the knowledge of someone's experience pouring into me, guiding me. So the first thing I did was swallow my pride, realize that life happens, but
Hmm.
this too will pass. But also staying true to my belief that there's never a lack of money. There's only a lack of knowledge and wisdom. So seek for knowledge and wisdom, and that's what I was on a pursuit for.
My good. There was something that you shared with me that I've never heard before. Something about the bank that they could actually flag you a certain way if
Ah,
because that was a
yes,
learning thing for me. I don't know if that still exists though.
yeah. So the darkest moment of my financial struggle, and the most embarrassing moment, which I had never heard of, I actually lost access to my personal accounts. I was flagged on the, and I'm going to call it the do not bank list, which is a legitimate list. And it typically is a list filled of individuals who have held a criminal record. I do not have a criminal record, but I was on that list, which meant I could not open up a checking account anywhere in the United States.
Wow.
Anywhere. The only because they have a national registry, and you go in, you put in your social security number. They're like, "Oh, sorry, Miss Bradford, we're not able to help you." The only thing that survived me from being able to transact was my business account, which again is tied to my EIN, so that was protected. So at that time, you never are supposed to mix your personal and business finances. Well,
Oh.
that was, I had to do that because there was no other way. And it was interesting because the bank, my primary bank that I have now, I went from being the stellar client to, oh my gosh, we can't deal with you, to now I walk in the bank and it's like, oh, Mrs. Bradford. And I always tease my banker. I said, do you remember?
Oh my goodness. I now you walk like your cheers, like a bar, like everybody knows your name, right?
Yeah.
Now,
But
how long did it take you to
the one thing, Furley, that I want to say, when this current bank did say, well, we'll open up an account for you, it was still a process. They said it'll be a deposit only. We can't give you a debit card. We can't give you any checks.
Oh my goodness.
And I had to hold that status for 12 months before they were able to fully open up to all the benefits
My
available
goodness.
to those
I've
who are.
never heard of such a thing. And I was like, my goodness, like, can you imagine how many people will be in that list during this pandemic?
Yeah, it'd be frightening. But at that time, again, there was the banking industry, the financial industry overall had so much liberty that it literally, I almost feel like the American consumer was victimized by this. There was no grace given. They just wanted all that they could take, and they people were bleeding from it.
Hmm. I love it. So first of all, I love your strength and I love your perseverance. And because obviously right now your life is very, very different. And I would love to talk about your business, like the being the this global business strategist. Obviously, you've learned so much from everything that you've been through. By the way, that was very powerful when you said that you sought the help and mentorship of those people who have experienced what you were going through. Because that is powerful. Because the same thing with me when I teach people how to become resilient, I've been through so much. And so you don't need, like degrees for me to teach you how to overcome all of those things because I've been there. And that is exactly what you do, because besides all of your, academic educational attainment, you also have a lot of experiences. So let's talk about your business, about being a strategist. Who are the people that you are helping right now to be able to, have their business become more profitable?
Our primary focus are big businesses, so government agencies, your larger, they're billion dollar companies actually.
Okay.
But I took all of these years of experience, and my passion has always been for the small business owner because they are truly the fuel of our economic engine. And I said, I know that the average small business owner cannot pay the prices that big business would pay, but
Mm-hmm.
I have all the knowledge and my team has all the tools and the techniques. Let's take this and let's translate it into scalable modules, scalable strategies so that the small business owner, the solopreneur, the entrepreneur, that's in, and this is key, that 3 to 5 year period, that's a sweet spot when change starts to happen within the business. And then take this knowledge and show them how to fish, basically how to identify not only where they are in their market, but what their respective market is doing, because success leaves clues. And I always remind my clients, Furley, is just remember, when you think of Coca-Cola, when you think of Apple, when you think of Microsoft, they started off as a small business owner just like you. But
Mm.
we tend not to think of that. They started off in a basement, they started off in someone's kitchen, right? And but because of that resiliency, because of that stick to itiveness, they were able um, to expand and grow. And I believe that same opportunity is there for each and every one of us if we are truly in our lane of excellence. Because often
The
we can get
lane of
sidetracked,
excellence.
right, by getting in someone else's lane.
Yes. Stay in your lane. Stay in your zone of genius, so to speak.
Yes,
Now, do you work with clients one on one, or do you do group coaching program as well?
I do both, and we are consultants. So the difference between a consultant and a coach is a consultant comes in for a specific task, a specific. We are providing kind of that expertise that you may not have, and you don't necessarily need long term.
Mm.
So that's where we'll come in. We do training and quote unquote coaching type sessions, but our sweet spot is really being able to come in. So for example, Furley, if you said, I'm looking at developing a new product and I'm trying to determine which market would be the best fit for me, that's where we come in as a consultant to review, to revise, to help you see where maybe you can't currently because you're so focused on the business that so we want to expand your lens so you can look broadly with it, then giving you the tools and the strategies to move forward. And then we pull out and we'll come back systematically and do regular checks. But again, my goal is to help that business owner to understand. I get everyone's an expert in what they do, in that product and that service. But success in business is a mindset. It's shifting that thinking to be a strategic leader in your business. And when
Wow.
you can look through that strategic lens, anything's possible. But if you always stay tactically focused, you're going to get tactical results.
Tactical versus strategic. Something to think about. Okay, that was really, that was very, very insightful. Now, that is for the business owners. Let's talk about homeowners. I know that you had mentioned that you specifically work with commercial and investment, but however, you had said something to me that actually, like, basically, stopped my tracks and said, like, what? Mortgage wellness check annually? It's like almost like going to a doctor. I've never heard of such a thing. I believe me, I'm also a realtor, and I have met so many mortgage professionals, but never have heard somebody talk about that. Please explain.
Sure. So even though we're on the commercial side, we do our loan advisors, and we consider ourselves advisors. We do still work with homeowners. And the important thing when you're thinking about your physical well-being, why do you go get an annual checkup? It's to make sure that the house is in order, that there's no indicator saying there may be something wrong. Well, that's the same thing with your finances. Your mortgage, for most people, that home purchase is the largest purchase they're going to make. So why is it, and I love this example, Furley, we'll spend time, you imagine going to get some gas. There's a BP on one side, there's a Chevron on the other. We will literally pause, look at the pennies difference to determine where we're going to gas up. But in our largest investment, we don't take the time annually to assess, how is this really working for me? How can I leverage it? What things have changed in my life? Maybe you're divorced. Maybe you have children going to school and you really don't want them to come out in debt. Well, how might you be able to harvest the equity that you currently have in your home in a way that doesn't impact your retirement goal of being debt free, having no mortgage in retirement? It also allows you to look at, let's say, if you're thinking about selling your home. Well, not only what is your current valuation, but what's happening in and around the market that could impact your ability to sell the home and to sell it at the value that you want. We look at even debt reduction strategies. How are you currently paying your mortgage? Are you doing it in a strategic way? Have you properly protected the home? So this is in your lane. From it, we'll have that insurance conversation, even though we're not the insurance broker, but we'll advise that client, you might want to go back if you made all these home improvements and make sure that you have the right level of coverage for this new home addition that you put on, for example.
Right, exactly. And oftentimes also, there's a lot of people with credit card bills, right? And
Mhm.
they're paying a massive amount of interest in it, but they do not want to touch, like their home equity, so to speak, to be able to pay for the higher interest. What's the psychology of that? What's going through people's heads that they're so afraid to touch their equity?
I think part of the fear is they think, well, if I touch the equity, then that means that I'm placing my home at risk. Well, anytime you don't own anything free and clear, there's always a risk. So
Mm.
that's the first thing you have to understand. When you purchase a mortgage, you're purchasing debt. It's
Oh,
debt.
okay, that say that again, because like people don't see, buying a home as a liability. Actually, they think it's an asset, but if you owe money, you are actually purchasing a debt.
Right. Unless your home is income producing,
Mm-hmm.
it, from looking at it from an accounting standpoint or a financial standpoint, it's not an asset. So if you had a home and you're renting out a room, or you have investment property and it's an Airbnb, or you have a renter, it, even though you may have a mortgage, it's income producing. So now that can be classified and seen as an asset building vehicle. But when you have a mortgage, that, as long as you have a mortgage, your home always has a risk attached to it. Meaning, if something happens to you, you become sick, you lose your job, unable to work, death, divorce, your income stream is limited, and you're not able to pay, then guess what? The property is at risk. You can lose it, and many do, unfortunately.
Yeah, and that's where I come in. Actually, like that's why this services that we offer actually help empower people to become financially resilient. You obviously, you know, educate them, and you empower them with that knowledge so that they understand how to make their money work and to be strategic. And of course, I am in the field of protecting them from losing what they have worked so much for during a catastrophic time in their life. Now,
Can
um,
I give you one example
yes, please.
about, just again, this mortgage wellness checkup? So remember, we were talking about the 2007 2008.
Mm-hmm.
Well, at that time, I did have a home equity line of credit. Well, again, I said banks were able to do whatever they wanted to do. So they were like, nope, we're closing this line of credit, because they wanted to minimize their risk. Well,
Oh,
because of that
wow.
past experience, I currently have a new line of credit. But I asked my bank, I said, can I withdraw my entire line instead of using it as I need to? And they
Mm.
said, yes. I said, great. I want to withdraw the entire line at a fixed rate for a fixed term. Now I
Mm.
can do whatever I want with that money. I can choose to invest it. It can make money for me. rather than me just drawing, a little bit at a time. I'm like, no, I'm going to do this differently because I remember what they were able to do before.
And also, one other question that I'm sure everybody is dying to ask: why is it that you're paying your monthly mortgage, yet you only see a little bit of amount being applied towards the principal? Why is it that you're paying so much for the interest?
Because you're, again, remember, you bought debt. You're buying someone else. You're using someone else's money to put a roof over your head. So you entered into an agreement when you signed those many, many documents that unfortunately most people do not read. And it said that you are in obligation to this lender for this amount for this period of time. And because of that obligation, you agree to this interest rate. But this is the key piece. People are always focused on, okay, I've got a 2% or 3%, whatever your interest rate may be. Fine. But the one question you should say is, what is the true cost of this loan? Because my interest rate may give me, just simple math, you know, $1,200 mortgage, just principal and interest. But when I look at the cost of this, maybe $200,000 home over a 30-year period, I may have paid $750,000, $800,000. So now let's look at what is the true interest that I paid for the money that I borrowed.
My goodness. So definitely, if you are a homeowner, you want to reach out to Lawanna because you can very well see she's a wealth of information and knowledge, and she's not going to steer you wrong, because I personally will be reaching out to her because I've never heard of a wellness check, and every year, and because there are so many different ways that she could suggest on how your money and your equity could work for you. Lawanna, oh my gosh, we could spend hours on just interviewing you for your just to pick your brain. I want to take a moment for you to also invite our audience to be part of our financial wellness boot camp.
Yes, thank you so much. I am so excited because this is our third year for our annual financial wellness boot camp. It is a boot camp designed for women. Because if you didn't know, there is a crisis, financial crisis facing women. The new term of the day is the she session, like recession, but she session. Women
Mhm.
have been hardest hit by the pandemic. And so this boot camp is designed to have deep conversations, but provide you with tips and tools to deal with everything from understanding your mindset, your relationship with money, uh, your credit as it relates to building wealth, why it's a cornerstone of wealth. We'll be talking about, Furley will be there talking about not just insurance from our perspective of the death benefit, but living benefit, how it can work for you today. I'll be talking about how to 10x your money by understanding this one critical tool in the documents that you signed on for your mortgage, and knowing how to read this and apply it. We'll also have an individual who will be talking about the mistakes that we make. We all make mistakes, and there's nothing wrong with that. Give yourself some grace, breathe. Now, how do you overcome it and build that resilience, as Furley is talking about? And lastly, and most importantly, we often ask ourselves, if I could go back, what would I say to my younger self? Okay, well, that's fine. I could tell my younger self a lot of things, but does it impact me today? No, it doesn't change where I am. The critical conversation is, what would I say to my future self? What do I want her to experience? How do I want her to look, to live, to feel? Will she be happy? Will she be financially secure? Will she be stress free because she knows that today I did the right thing to take care of her tomorrow? And that will be what closes us out. So I just invite everyone to please attend. This is going to be related to the changes that have happened in the financial industry. There are radical changes. If you don't know about them, you do need to know, including, Furley, they've even starting to change how the credit score is calculated. It's
Wow.
called the FICO 10. So
Probably
again,
10.
if you don't know about it, you want to be there because your
I
it
know, I
will
know. And we will
work
be
for you.
we're going to be posting the link on the comments of this broadcast. Please share it with everyone because we women need to really lift one another. And it
Yes.
all starts with us being on the know of the most important things that would actually not only move the needle in our business, but also change our lives, you know, and our personal finances. Lawana, you've been such a wealth of knowledge, and like your wisdom is amazing. I love your beautiful heart. I love that the remarkable person that you are. You are truly a blessing. Any last words before we go?
Thank you so much, Furley. This has been such an honor. Love this. And I look forward to working with you more in the future. And to those that are listening, I just want to encourage you no matter where you are in life, just know that your vision for yourself is your truth and your center. And don't let anyone tell you what can't be done. Just know that as long as you stay focused and stay true, that when your vision intersects with opportunity, success is inevitable. I wish you
Woo!
well, stay blessed, and be safe.
I love that. That is a story of resilience. Until next time, this is Furley Almonte, your host for Faces of Resilience. Until then, stay well and live vibrantly. Take care. Bye bye.
Bye.